Based on the historical data and forecast, Bitcoin shows a clear upward trend, consistently breaking through resistance levels and supported by positive forecasts. The RSI indicates that the asset is currently not in overbought or oversold territory, suggesting that the current trend is sustainable. The Bollinger Bands are widening, indicating increased volatility and potential for further price movement. Therefore, I recommend a long position strategy. The entry price should be $74,200. We will set a stop-loss order at $71,900, just below the support level, to limit potential losses. The initial target price is set at $77,700, aligning with the forecast and the upper Bollinger Band. To maximize returns, we will implement a dynamic target price strategy. As the price reaches $77,700, we will move the stop-loss to break even, protecting our initial investment. If the price continues to rise, we will adjust the target price incrementally, aiming for $78,000 and potentially higher, depending on further technical analysis and market conditions. This approach combines the benefits of trend following with risk management, capitalizing on the current bullish momentum while protecting against unexpected downturns. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, Ethereum exhibits a strong upward trend, breaking through the resistance price of $2,370. The RSI consistently remains above 50, indicating bullish momentum, and the forecast suggests continued price increases. Therefore, I recommend a long position strategy. We will enter a long position at $2,320 with a stop-loss placed at $2,240, just below the recent swing low. The initial target price will be $2,420, aligning with the forecast for April 19, 2026. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, indicating an oversold condition, we can consider a slightly earlier entry. However, given the strong uptrend, the primary strategy remains a long position initiated at $2,320 with a stop-loss at $2,240 and a target price of $2,420. If the price reaches $2,420, we can consider taking partial profits and moving the stop-loss to break even to protect gains, while leaving the remaining position to run towards a higher target price of $2,470. As suggested by the forecast for April 22, 2026. Based on the historical data and forecast, XRP shows a slight upward trend with price fluctuations. The RSI consistently stays below 80, indicating that the asset is not overbought. Considering the forecast prices, we anticipate a continued upward movement. Therefore, I recommend a long position strategy. We will enter a long position at $1.37, coinciding with the initial forecast price and recent price action. To mitigate risk, we will set a stop-loss order at $1.34, just below the recent low and the lower Bollinger Band. Our target price will be $1.41, aligning with the forecast high and resistance level. To refine this strategy, we will incorporate the Bollinger Bands. If the price breaks below the lower Bollinger Band, it signals a potential downward correction, triggering the stop-loss. Conversely, if the price touches the upper Bollinger Band, it indicates a potential overbought condition, suggesting a partial profit-taking opportunity. Combining the RSI and Bollinger Bands, the portfolio will be 60% RSI strategy, 30% Bollinger Band strategy, and 10% trend-following strategy. This diversified approach aims to maximize returns while managing risk effectively, capitalizing on the anticipated upward trend in XRP. Based on the historical data and forecast, BNB shows a fluctuating trend with periods of consolidation. The RSI readings indicate that the asset has been in an oversold condition recently, with values consistently below 50. Considering the support price of $611 and the forecast prices hovering around $609 to $629, a strategic long position can be considered. I recommend entering a long position at $609 plus $0. The stop-loss should be placed just below the support level at $610 plus $0 to mitigate potential losses if the price declines further. The initial target price should be set at $629 plus $0, aligning with the upper range of the forecast prices and a reasonable profit target. To refine the strategy, we will incorporate the Bollinger Bands. The price has been trading near the lower band, suggesting a potential bounce. If the price breaks above the upper Bollinger Band, which is currently at $645 plus $0, it would signal a strong bullish momentum, prompting a revision of the target price to $648 plus $0, the resistance level. If the price fails to reach the upper band and shows signs of reversal, a trailing stop loss can be implemented, gradually adjusting the stop loss upwards as the price increases to protect profits. This combined RSI and Bollinger Bands approach aims to capitalize on potential rebounds while managing risk effectively. Based on the historical data and forecast, Solana exhibits an overall upward trend, supported by the consistently high close prices and the forecast indicating continued stability around $83.5 to $85.5. The RSI fluctuates between 36.8 and 53.5, suggesting periods of both oversold and overbought conditions. Considering the RSI, we can implement a strategy that involves buying when the RSI falls below 20 and selling when it rises above 80. The Bollinger Bands indicate that the price is currently near the middle band, with the bottom band around $78.7 and the top band around $86.7. Therefore, a long position can be initiated when the price touches the bottom Bollinger Band, and a short position can be initiated when the price touches the top Bollinger Band. My recommended investment strategy is a hybrid approach combining RSI and Bollinger Bands for optimal returns. We will enter a long position at $78.7, coinciding with the lower Bollinger Band and a potential oversold RSI reading. The stop loss will be set at $77.7, just below the bottom band to mitigate potential losses. The initial target price will be $84.7, aligning with the center of the Bollinger Bands and a reasonable profit margin. If the price continues to rise, we can adjust the target price to $86.6, the recent resistance level. This strategy leverages both momentum, RSI, and volatility, Bollinger Bands, to identify high-probability trading opportunities and manage risk effectively. Based on the historical data and forecast, TRON shows a slight upward trend. The price has consistently traded near the support level of $0.32, and the forecast suggests continued upward momentum. The RSI has fluctuated between 60 and 69, indicating moderate buying pressure, but not yet overbought. The Bollinger Bands have been narrowing, suggesting a potential breakout. Therefore, I propose a long position strategy targeting a price increase. We will enter a long position at $0.326. A stop-loss order will be placed at $0.318 to limit potential losses if the price reverses. The target price will be set at $0.334, aligning with the forecast high and providing a reasonable profit margin. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider entering a long position at the prevailing price. Conversely, if the RSI reaches 80 or above, suggesting an overbought condition, we will consider exiting the position. Furthermore, if the price touches the lower Bollinger Band, it signals a potential buying opportunity, while touching the upper band suggests a potential selling opportunity. Combining these signals with the overall upward trend, this strategy aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a slight upward trend with price fluctuations. The RSI consistently hovers around the 45 to 55 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been fluctuating within the bands, suggesting continued volatility. The support price is consistently at $0.0909, while the resistance is at $0.1. Considering the forecast, the price is expected to continue its upward trend, approaching $0.0958. Therefore, I recommend a moderately bullish strategy. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will enter a long position when the RSI falls below 30, and the price touches the lower band of the Bollinger Bands. Currently, the RSI is around 50, so we will wait for an opportunity. If the RSI drops to 28 and the price reaches $0.0892, we will enter a long position with an entry price of $0.0892. The stop loss will be set slightly below the lower band at $0.0885 to protect against unexpected downturns. The initial target price will be the resistance level of $0.1. If the price reaches $0.1, we will move the stop loss to the entry price of $0.0892 to secure profits. If the price continues to rise, we will set a second target price at $0.105. This strategy aims to capitalize on short-term price dips while benefiting from the overall upward trend. Based on the historical data and forecast, Cardano demonstrates a sideways trend with support at $0.24 and resistance at $0.264. The RSI fluctuates between 39.1 and 54.0, indicating periods of oversold and overbought conditions. The Bollinger Bands show a narrowing range, suggesting decreasing volatility. Considering the forecast prices hovering around $0.243 to $0.242, a conservative strategy focusing on short-term fluctuations within the established range is recommended. I propose a strategy that combines RSI and Bollinger Band signals to capitalize on minor price swings. The entry price for a long position should be $0.242 when the RSI dips below 40 and the price touches the bottom of the Bollinger Bands, indicating an oversold condition. Set a stop loss at $0.238, just below the support level and the bottom Bollinger Band. The target price should be $0.254, aligning with the resistance level and the middle Bollinger Band. If the price fails to reach the target within a week, or the RSI rises above 60, close the position to minimize losses. Conversely, for a short position, enter at $0.246 when the RSI exceeds 60 and the price touches the top of the Bollinger Bands, setting a stop loss at $0.26 and a target price of $0.24. This approach balances risk and potential reward within the current sideways market. Based on the historical data and forecast, Bitcoin Cash demonstrates a fluctuating trend with periods of oversold and overbought conditions. The RSI consistently dips below 40, indicating oversold territory, while the Bollinger Bands show price volatility. The support price remains stable at $431, acting as a floor, while the resistance at $443 has been tested multiple times. Considering the forecast for the next week, the price is expected to hover around $436 to $440, with slight downward pressure initially before a potential rebound. Therefore, I recommend a long position strategy targeting a moderate profit with a defined risk management plan. The entry price for this trade should be $436. Place a stop-loss order at $431 to mitigate potential losses if the price breaks below the support level. The initial target price is $440, aiming for a $4 profit. However, if the price reaches $440, consider moving the stop-loss to the break-even point around $436 to secure profits and manage risk. This strategy combines RSI oversold signals, Bollinger Band volatility, and support/resistance levels for a balanced approach. The portfolio will be 60% long Bitcoin Cash, 20% in stable coins, and 20% in other cryptocurrencies. Based on the historical data and forecast, Chainlink shows a slight upward trend. The price has been fluctuating within the support of $8.74 and the resistance of $9.38. The RSI values have mostly been within the 40 to 60 range, indicating a neutral to slightly bullish momentum. The Bollinger Bands have also been relatively stable, with the price occasionally touching the upper and lower bands. Considering the forecast for the next week, the price is expected to remain around $9.15 to $9.46, suggesting a continuation of the upward trend. Therefore, I recommend a long position strategy with an entry price of $9.14, a stop-loss price of $8.74, and a target price of $9.46. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 20, oversold, or exceeds 80, overbought, we will adjust the position accordingly. If the price touches the lower Bollinger Band, it signals a potential buying opportunity, while touching the upper band suggests a potential selling opportunity. Combining these signals with the overall trend, I suggest entering a long position at $9.14, placing a stop-loss at $8.74 to protect against downside risk, and setting a target price of $9.46 to capture the potential upside. This portfolio is the most efficient strategy based on the three strategies. Based on the historical data and forecast, Ether.fi shows a slightly downward trend with fluctuating volatility. The RSI consistently hovers around the middle range, indicating neither strong overbought nor oversold conditions. However, the price has tested the support level of $0.438 multiple times, suggesting it's a crucial level to watch. The Bollinger Bands show a narrowing trend, indicating decreasing volatility. Considering these factors, I propose a cautious strategy focusing on potential bouncebacks from the support level. My recommended strategy is to initiate a long position when the price touches the support level of $0.438. Set a stop-loss order at $0.424, just below the lower Bollinger Band, to protect against a potential breakdown. A reasonable target price would be $0.463, near the recent high and slightly above the center of the Bollinger Bands. This approach combines the support level as an entry point, the lower Bollinger Band for stop-loss protection, and a modest target price based on recent price action. This strategy aims to capitalize on short-term bounces while mitigating risk with a well-defined stop-loss. Based on the historical data and forecast, STAX shows a slightly upward trend with periods of consolidation. The RSI consistently hovers around the oversold level of 30 to 50, indicating potential buying opportunities. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility followed by a potential breakout. Given the current RSI of 54.3, which is approaching the overbought level of 80, and the forecast price moving upwards, I recommend a short-term bullish strategy. Specifically, when the price reaches $0.235, enter a long position. Set a stop-loss at $0.228 to protect against a potential downside reversal. Aim for a target price of $0.25, aligning with the resistance level. To refine this strategy, I'll incorporate the Bollinger Bands. If the price touches the upper band of $0.232, consider taking partial profits to secure gains. If the price falls below the lower band of $0.208, it signals a stronger bearish trend, and the stop-loss should be adjusted to $0.212, the support level. This layered approach balances risk and reward, capitalizing on the predicted upward momentum while safeguarding against unexpected market shifts. The final portfolio will be 60% of the RSI strategy, 30% of the Bollinger Band strategy, and 10% of the support and resistance strategy. Based on the historical data and forecast, Conflux shows a generally upward trend with periods of consolidation. The RSI consistently fluctuates, indicating periods of oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. The forecast for the next week indicates continued upward momentum, with prices ranging from $0.0546 to $0.0573. Considering these factors, I propose a long-term investment strategy with an entry price of $0.0546. A stop-loss should be placed at $0.0542, just below the support price, to limit potential losses. The initial target price is set at $0.0573, aligning with the upper end of the forecast range and a reasonable profit target. To refine this strategy, I will incorporate RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, we will enter a long position. Conversely, when the RSI exceeds 70, suggesting an overbought scenario, we will consider exiting the position or taking profits. The Bollinger Bands will serve as dynamic support and resistance levels. If the price touches the lower band, it suggests a potential buying opportunity. If the price reaches the upper band, it indicates a possible selling point. Combining these signals, the final portfolio will be a long position with an entry price of $0.0546, a stop-loss at $0.0542, and a target price of $0.0573, adjusted based on RSI and Bollinger Band signals for optimal risk-reward ratio. Based on the historical data and forecast, Lido DAO shows a clear upward trend. The price has been fluctuating within a range but consistently closing higher, supported by a rising RSI, which peaked at 65.0. The forecast indicates continued upward momentum, with prices expected to reach $0.396. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. The primary strategy will be a long position, capitalizing on the bullish trend. Our entry price will be $0.353, coinciding with the first day of the forecast period. Given the recent volatility, we will set a stop loss at $0.336, just below the established support level, to protect against unexpected downturns. The initial target price will be $0.388, aligning with a significant forecast price and a potential resistance level. If the price reaches $0.388, we will adjust our stop loss to break even to protect profits and potentially extend the trade to the next forecast level of $0.396. The RSI reading suggests that the asset is not currently overbought, allowing for further upward movement. The Bollinger Bands also confirm this, as the price is trending towards the upper band, indicating a potential for continued growth. Based on the historical data and forecast, Optimism shows a slight upward trend, fluctuating within a range. The RSI indicates that the asset is currently in the oversold territory, with values mostly below 50, suggesting a potential buying opportunity. The Bollinger Bands show that the price is occasionally touching the lower band, further reinforcing the oversold signal. The support price of $0.115 provides a floor, while the resistance at $0.128 acts as a ceiling. Considering these factors, I recommend a long position strategy with an entry price of $0.114 plus $0.01, setting a stop loss at $0.113 plus $0.01 below the entry price, and a target price of $0.12 plus $0.01. To refine this strategy, I will incorporate a combination of RSI and Bollinger Band signals. If the RSI falls below 30, indicating a strong oversold condition, enter a long position at the next candlestick open. Place the stop loss just below the lower Bollinger Band to manage risk. The target price will be set at the upper Bollinger Band, aiming to capture a significant portion of the potential upward movement. For instance, if the RSI dips to 28 and the price opens at $0.114 plus $0.01, enter a long position. Set the stop loss at $0.101 plus $0.01 and the target at $0.121 plus $0.01. This combined approach leverages both indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Celestia shows a generally upward trend with periods of consolidation. The RSI consistently fluctuates between oversold and overbought levels, indicating potential buying and selling opportunities. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Given the current RSI of 57.7, which is approaching the overbought level of 80, and the forecast prices consistently above $0.313, I recommend a long position. Entry price will be $0.313, with a stop loss placed just below the support level at $0.312. The initial target price will be $0.335, aligning with the forecast high. To refine this strategy, I will incorporate the Bollinger Bands. If the price breaks above the upper band, it signals continued upward momentum, and the target price will be adjusted to $0.341, the resistance level. Conversely, if the price touches the lower band, it indicates a potential pullback, and the stop loss will be tightened to $0.308. This dynamic strategy, combining RSI and Bollinger Bands, aims to maximize returns while managing risk effectively, with a focus on capitalizing on the prevailing upward trend and anticipating potential breakouts. Based on the historical data and forecast, Injective shows an overall upward trend, supported by recent price action and a projected increase over the next week. The RSI values fluctuate, but generally remain within a range, suggesting neither extreme overbought nor oversold conditions for an extended period. However, the Bollinger Bands indicate periods of volatility and potential price reversals. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels for optimal returns. Initially, I recommend a long position entry at $3.06, coinciding with the first forecast price and slightly above the recent close. The stop loss should be placed just below the support level at $3.10 to mitigate potential downside risk. The first target price should be set at the resistance level of $3.42, representing a significant profit opportunity. If the price reaches the first target, consider a partial profit booking and adjust the stop loss to break even. If the RSI dips below 20, indicating an oversold condition, consider adding to the position at $2.68 with a stop loss at $2.65 and a target price of $3.10. This diversified approach balances risk and reward, capitalizing on the prevailing upward trend while incorporating strategies to protect capital and maximize gains. Based on the historical data and forecast, Chiliz shows a mixed trend with periods of consolidation and upward movement. The RSI fluctuates between 42.0 and 58.6, indicating neither strong overbought nor oversold conditions consistently. However, the recent upward trend and the forecast prices suggest a potential for further gains. Considering the support price of $0.0396 and the resistance price of $0.0498, I recommend a moderately bullish strategy. We will implement a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels for optimal efficiency. The strategy involves an initial entry at $0.0387 on April 16, 2026, coinciding with the forecast price and near the recent support. The stop loss will be set at $0.037, slightly below the lower Bollinger Band, to protect against unexpected downturns. The first target price is $0.0408, aligning with the forecast price for April 22, 2026, and the upper Bollinger Band. If the price reaches this target, we will move the stop loss to the entry price of $0.0387 to secure profits. A second target price will be $0.0498, the resistance level, for a more ambitious profit goal. This combined approach leverages multiple indicators to maximize potential returns while mitigating risk. Based on the historical data and forecast, DeXe shows a clear upward trend. The price has been consistently making higher highs and higher lows, and the forecast for the next week indicates continued upward momentum. The support price is consistently at $9.8, and the resistance price is $12.3. The RSI has spent a significant amount of time above 70, indicating overbought conditions, but the recent price action suggests that the uptrend is strong enough to sustain further gains. The Bollinger Bands have been expanding, indicating increased volatility and potential for further price movement. Given these factors, I recommend a long position strategy. The entry price for this trade should be $10.6. The stop loss should be placed just below the support level at $9.8, set at $9.7 to allow for some price fluctuation while protecting against a sudden reversal. The initial target price should be the resistance level at $12.3. However, given the strong upward momentum and the forecast data, a more ambitious target is warranted. We will adjust the target price to $12.6. This strategy combines the RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. The RSI nearing 80 suggests a potential pullback, but the overall trend remains bullish. This portfolio will be 60% long DeXe, 30% in cash, and 10% in stable coins. Based on the historical data and forecast, Enjin Coin exhibits a strong upward trend, particularly evident in the recent price surge from $0.0598 to $0.0911. The RSI consistently exceeded 70, reaching a peak of 95.2, indicating overbought conditions. However, the forecast suggests continued momentum, with prices expected to climb from $0.0585 to $0.0995. Considering the support price of $0.0875 and the recent breakout, a long position is warranted. I recommend entering a long position at $0.0585. The stop loss should be placed just below the support level at $0.055 to mitigate potential losses. The initial target price should be $0.0882, aligning with the first forecast price. To refine this strategy, we incorporate Bollinger Bands analysis. The price has consistently been above the upper band for several days, confirming the strong bullish trend. I suggest adjusting the target price to $0.0995 based on the highest forecast price. Given the high RSI and the upper Bollinger Band proximity, a partial profit-taking strategy could be employed. Take 50% of the position off the table at $0.0882 and let the remaining position run with a stop-loss move to the center of the Bollinger Band, around $0.08. This approach balances profit maximization with risk management, capitalizing on the current momentum while protecting against a potential reversal.